And with that being shared, now let's dive into our breaking story of the day and discuss one of the largest asset managers in the world, which is Fidelity, currently controlling $4.5 trillion in assets under management, and their $1 billion Bitcoin price prediction, as well as their latest news with their ETF application. And shout out to their CEO, Abigail Johnson, who is considered the most powerful woman in finance, virtually the Larry Fink of finance as a woman, you know what I mean? Which is a pretty big deal. She is actually the granddaughter of the original founder of Fidelity. And if you don't know, now you know who that lady is on that thumbnail. But anyways, let's break this down, fam. News just in, Fidelity says that the Bitcoin price is heavily discounted. I'd have to agree with them 110%. Here's a brand new article just published. Fidelity revives their Bitcoin ETF prospects with updated app, breathing new life into investor hopes. All eyes on ETFs. So let's break this down. As you know, ETFs are investment funds users can buy and sell on the stock exchanges, similar to individual stocks. They allow traders to invest in a variety of assets, including stocks, bonds, and in this case, the king crypto, Bitcoin. Let's go. ETFs are designed to follow the performance of a specific index, asset, or commodity. Bitcoin, as we know, gets more and more popular, and traditional investors and asset managers are eager to introduce a Bitcoin ETF to the market. We have the total addressable market sitting north of 700 trillion, and Bitcoin can't wait to tap into that. Let's get it. Bitcoin ETF would let the investors get involved with the famous crypto without actually owning it. This makes it easier for traditional investors to enjoy the crypto game. That's right. Bring it. Fidelity, the highly respected name in finance, has made a big move by updating its application. Fidelity's recent ETF update pays special attention to reducing the risks associated with Bitcoin ETFs. The crypto market is known for price swings, and Fidelity understands the potential impact on investors. Addressing these risks is crucial to making a Bitcoin ETF work well and last. The crypto community has been waiting eagerly, to say the least, for this Bitcoin ETF to become a reality for years. In fact, it's now been 10 years since the first ETF application got disproved by the SEC. And even though the SEC has rejected the previous apps, the desire for an ETF tracking Bitcoin remains stronger than ever. A Bitcoin ETF offers a more stable, regulated way for the investors to join the crypto world. If you're not familiar with ETFs, they're like investment funds that you can buy and sell stock exchanges, similar, again, to individual stocks, allowing you to invest. So anyways, the institutional interest and regulatory shifts are amongst us right now as we're witnessing in real time. Recently, there was this awesome thread which was shared. It shows Fidelity manages $4.5 trillion assets under management with 43 million investors trusting in Fidelity. And they recently published a new research explaining why investors should buy Bitcoin. Here are 10 key takeaways why investors should buy Bitcoin by Fidelity. Number one, Fidelity finds Bitcoin is the best money. That's fact. It is perfect money. Quoting them here from their report, Bitcoin clearly possesses a lot of good qualities of money, combining the scarcity and durability of gold with the ease of use, storage, and transportability of fiat. And you compare that with fiat currency alongside gold, and Bitcoin is just superior, checking all of the boxes, making it a no-brainer. Next, they share, Fidelity explains the virtuous cycle of Bitcoin, quoting them again, this Bitcoin network competition is likely to result in a winner-take-all scenario as the network grows and becomes more valuable. And guess who is the winner that takes all? You guessed it, it's Bitcoin fam. Next up, they share, Fidelity compares Bitcoin to the wheel, quoting them again, the invention of the wheel represented an entirely new technology that, once invented, could never be reinvented. Similarly, never in human history had the problem of peer-to-peer electronic cash been solved until Bitcoin. Damn right, Bitcoin, so innovative, it's a game changer. Fidelity is amazed that Bitcoin survived. Quoting them here, every minute, hour, day, and year the Bitcoin survives increases its chances of continuing into the future. People would probably underestimate all the negative events the Bitcoin has already endured. That's right, over 10,000 times the mainstream media has announced Bitcoin dead, right? With all the media FUD. Anyways, they also share, Fidelity provides hard numerical data showing how secure the Bitcoin network is compared to other coins. Facts, quoting them here, in terms of sheer computational power required to alter the network's consensus, Bitcoin far exceeds any remaining proof-of-work competitors. And I heard Andreas Antonopoulos address the question like 5 years ago, can any powerful nation state attack and destroy Bitcoin? The answer, no, it's too powerful. The hash rate is too strong. The more you attack the Bitcoin network, the stronger it becomes. So it has achieved what I call the escape velocity. Now back to Fidelity, they compare Bitcoin to the internet. Quoting them from the report, the internet protocol suite known as TCP/IP is an open source based layer where apps on top which to be built. So owning Bitcoin would be akin to being able to own the base layer of the internet. So how many of you hodl Bitcoin? Congratulations, because you own a piece of the internet. Only better. Also, as shared here, Fidelity writes, Bitcoin continues to dominate the market cap of all competing cryptocurrency tokens. That's right. There is now a 51% attack on the altcoin market as the Bitcoin dominance continues to climb and the Ether dominance continues to decline. I firmly feel Bitcoin is likely to outpace Ether this cycle, but let me know your thoughts, fam. And as they share here, Fidelity agrees the Bitcoin is useful. It appears at this point, the Bitcoin has found a role in the digital asset ecosystem as a scarce store value asset. At the very least, you're damn right. They also share, Fidelity concludes the Bitcoin should be considered first and separate from all other digital assets that have followed it. I agree there 100%. As Michael Saylor once said, there is no second best. And to watch or read this entire research study by Fidelity, check the show notes below the video in the description. Now for their $1 billion price prediction. I'm not making this up. Again, don't shoot the messenger. People may comment, yo, you're crazy, JV, to even put out there that Bitcoin can reach $1 billion. Again, don't shoot the messenger. This is coming from Fidelity, one of the world's largest asset managers. We have Jurian Timmer, director of global macro of Fidelity, put forth the notion Bitcoin has the potential to reach $1 billion per coin in roughly 2 decades by the year 2038, to be exact. That's right. And to support his forecast, Timmer employed a combination of models and charts, which we're going to break down, with a particular focus on the infamous stock-to-flow model, as well as his own demand model. These analytical tools form the foundation of his primary $1 billion price prediction. Now, this model in the chart you see on your screen employs Metcalfe's law. So according to this, the number of its users grow linearly. A network's value, the Bitcoin price, grows geometrically. This means that the utility and the adoption of Bitcoin are expected to grow more rapidly compared to its network of users, exchanges, ATMs, and the participating retailers. Therefore, this Bitcoin price model predicts Bitcoin will reach $1 million by the year 2030, actually right in alignment with Cathie Wood of ARK Invest, as that is their virtually between their base case and their bullish case, and they even have their bearish case, ARK Invest, at 250,000-ish in that ballpark. So in contrast, Timmer's stock-to-flow model notes the event of significant price surges during each halving event, and consequently, when considering this model in conjunction with the other factors, it foresees a price range of $1 million to $10 million per coin by the year 2030. Timmer's demand model is more inclined towards reflecting the bottom of the Bitcoin price, but on the other hand, the stock-to-flow model seems to provide a better approximation for the peak of the King coin. However, it's worth noting that the disparity between these two models widens significantly beyond the year 2030. The reason behind the gap is expected to be the changing value of the dollar. I also want to point out really quick that according to the stock-to-flow model, Plan B is the creator of that model. It was historically so accurate up until the last halving. Things kind of switched a bit. We had the Black Swan event, so forth. We had the FTX collapse and Luna. But nonetheless, stock-to-flow, I know it's a wide gap, but they're predicting a range between $100,000 per coin and $1 million per coin post-2024 halving. Virtually meaning from the years 2024 to 2025, stock-to-flow is pointing out somewhere between $100,000 and $1 million per coin. I just wanted to point that out. Now, how changes in the dollar could greatly impact the influence of the Bitcoin price action. Here's where you got to pay close attention, because here's where things drastically change. Timmer proposes the value of the dollar undergoes fluctuations over time when compared to other assets, which is true. For instance, if a dollar were invested in stocks during the 18th century, its present day value would be roughly $4 billion. Similarly, Timmer implied that if $1 million was invested today, it can grow to $1 billion in a span of 20 years. This further revealed that the purchasing power of the dollar is significantly reduced due to factors like inflation and depreciation. Preach. Thus, Timmer's statement implied that keeping a fixed amount of dollars for many years may lead to reduced purchasing power due to the assets changing value. So over the last few years, an increasing number of companies are taking over that $1 trillion market cap, and as a result, it's foreseeable within the next couple of decades, the concept of $1 trillion valuation will become more and more common. So, is this milestone still currently achievable for Bitcoin? Let's break it down. Despite Bitcoin's historical growth, it had recently faced a significant setback. As we know, setbacks are just setting yourself up for the future, when we have corrections in the market, the hash rate continues to grow, TikTok next block, and Bitcoin couldn't really get much stronger. We also have to consider the BRICS alliance and the de-dollarization, you know what I mean, as countries around the world are stepping away from the US dollar. So if we had a collapsed dollar and hyperinflation like we're kind of witnessing right now over in Argentina and countries like that, yeah, billion-dollar Bitcoin can become a reality a lot faster than many of you think. It all depends upon the power of the dollar. But one thing is for sure, as long as there's wars going on and they have excuses to print more and more money, it's just going to depreciate that value of the dollar, and Bitcoin's going to grow so much stronger as, again, all these fiat currencies will eventually go to zero against Bitcoin. So there you have it, fam. What are your thoughts on Fidelity's predictions and their report on why you should buy Bitcoin? Let me know your honest thoughts in the comments right down below.